Hi, this is Kerry Artak with Wicked Stocks and Artak Advisory, bringing you kind of a broad brushstroke analysis of the U.S. dollar vis-a-vis the U.S. dollar index. I'm going to try to not to drone on too much in this video. It may go 10 minutes plus, just so you know, because I'm also going to cover channel and speed line analysis using the dollar index. But I also think, the underlying message will be what is the directional dynamic right now for the U.S. dollar near term and long term. U.S. dollar index, just a little bit about it, started in 1973. It hasn't changed much since then. It has the same sort of composition. When the European Union came into existence, some of the European individual currencies were consolidated into the euro. Euro is a big part of the U.S. dollar index. It is still a widely followed index by banks and institutions, and the overall health and well-being of the U.S. dollar in relation to some of our larger trading partners. But what is missing is the Mexican peso and Chinese yuan. And those are two substantial trading partners of ours. So it's not a complete picture of the U.S. dollar. I just want to mention that. But this is a monthly bar chart of the U.S. dollar index. The U.S. dollar index is also tradable as a futures instrument in the ICE futures exchange. It's a pretty healthy futures contract. In other words, it's got decent volume. It's very tradable. There are also some ETFs that are tradable. Several notable ones. I don't have them in front of me. Maybe I'll throw that in the post editing. But you can also trade the U.S. dollar by ETF as well. So anyway, this is a monthly chart. Goes back to that February high, an all-time high for the U.S. dollar as far as the U.S. dollar index is concerned, 164.72. And then you've got the March 2008 low of 70.69. And since March 2008, and we just cleared March of 2025, so this is a 17-year span of time. We are in a pretty well-defined, still, believe it or not, upward structure with as far as the U.S. dollar is concerned in terms of trend. I'm going to get to that in a minute. In fact, I'm going to get to that right now. If you've been watching the wickedstocks.com videos on YouTube, we throw these free YouTube videos out on occasion. I do periodically update the U.S. dollar index, and if you recall, if you've been following us for at least a few years, you know that we pegged this high here pretty well at the time. 114.78 was testing this long-term channel top. Once again, a 17-year channel top. 117.71 now and climbing. When you test a channel top, channel dynamics suggest you must respect that market's ability to fall to channel support. It is like a band the market can trade inside of. And that channel support is 96.67. It's not as if you're expecting 96.67, but you can't dismiss it as a possibility. What also occurred at this high area back in September of 22, you may recall if you've been following us for some time, is the fact there's a descending two-thirds speed line that I'll show in a moment. But I'm going to use this slide just to sort of remind you of how speed lines are constructed. It's a very manual process, but I really love them in terms of their ability to define trend. I like them as much as the channel. The two combined for me in terms of a complete system, really. So if you take a look at this 164.72 high and the 70.69 low, two-thirds of the way back up, I can actually grab that right now and show you that two-thirds of the way back up is 133.317. So if you draw a trend line from 164.72 to 133.317 in the time frame in which the low is made, and I'll get to that next chart right here, you have yourself a two-third speed line. There's also a one-third speed line. I might as well show that as well. A one-third speed line is created exactly the same, except you're using the one-third pullback, and this is just a rough eyeball here right now, but you can see that that is the descending one-third speed line that came into existence once the March '08 low was made. It did not exist before then, and as long as that March '08 low is not taken out and violated, it continues to exist through time. And we closed above that descending one-third speed line September of 14. As far as speed line analysis goes, when you close above a descending one-third speed line, your objective becomes a descending two-third speed line. It doesn't always play out that way, of course, but that is the overall idea. And you can see how the two-third speed line then held beautifully along with the convergent channel top in September of 22. The market fell away. We actually retraced back to the long-term speed line in January, held again, fell away. And so here we are. Are we going to test 96.67? I think we are. This is just a hunch. I don't have a clear indication of it. I will have a clear indication of that if we were to close this week below 101.27, which is yet another channel structure. 101.27 goes back over a year. In July, it'll be about a 2-year channel structure. 101.27, we've tested it this week. We can round back up into the 110 handle now over the next, I don't know, 6 to 8 months. Remember, this is a monthly chart. But if we close below 101.27, and that would be consistent with what we're seeing right now, I think, because it looks like we are entering an all-out trade war. China has retaliated overnight with their own tariffs against the U.S., and so here we are. If we close below 101.27, this could be a 1-month collapse, or it could be a 3 to 5 month sell-off to 96.67. It's difficult to ascertain. I'm going to call this a 2 to 3 month signal if we close this week below 101.27. Until then, the U.S. dollar index can grow oversold and round back up into the 110 handle perhaps in the coming months. Now, I'm going to convert this to a weekly chart so we can zoom into this area here and show, the 101.27 channel bottom. I do consultancies on Zoom with certain clients, and this was pegged in a private call, I must say. We did not put this on YouTube. But we had a sell signal in the U.S. dollar index on this weekly chart back in early March when we closed below this rising channel bottom. The objective became this, classic channel bottom off a series of. This is the actual low following the high. So if you follow the sequence, low, high, you have yourself a channel bottom at 101.27. We can round back up. In terms of channel dynamics, as I said earlier, with that long-term 17-year channel top, having tested channel support at 101.27, you must not discount the market's ability to rotate upward in the coming several months, 3 to 5 months, 6 to 8 months, back into the 110 handle channel resistance. But once again, if we close below 101.27, that is our next clear sell signal. And I would expect that 96 handle that I will show right here. So, same exact chart that I just showed, weekly chart. If we close below 101.27, we do have a descending channel bottom at 96.12. And this is an even more significant channel than the 101.27 in that it spans some, let's see here, 2.5 years. 96.12 would be the objective. This is a weekly chart. Could this be 3 to 5 weeks? Could this be 2 to 3 months? I think I'd mentioned in this previous slide that if we close below 101.27, the 96 handle, a realistic 2 to 3 month target. So I'll just continue with that. If we close below 101.27, 96.12, a 2 to 3 month target. Now, this 96.12 spot, this price point, is reminiscent, if you recall earlier in the video, when we have a rising channel bottom at 96.67. So we have two convergent channel structures here. This is a range of significant long-term support that I would expect within 2 to 3 months of closing below 101.27 in the U.S. dollar index. You can pull this price up for the U.S. dollar index anywhere. If you got a stock quote system, you probably already have it on your system. But just know that if we close below 101.27, the 96 handle becomes a 2 to 3 month target. This is an area, especially the 17-year channel bottom, that can absorb not only annual selling pressures, but we could bottom out here through 26 and beyond and rotate higher again. So we do, one point I want to make, despite what we're seeing right now near to midterm, if you will, in the U.S. dollar, which is a lower low, lower high potentially dynamic since the September high of 22, that the 17-year trend in the U.S. dollar still remains bullish, at least on a technical basis. This would be a solid zone to buy into. This is also a good area to look, a way to look at interest rate environment and our sort of our standing, the U.S. currency standing in the world. I will say that if we close below 96.12 or this area in the coming months, it doesn't look pretty as far as the U.S. dollar is concerned. I would expect a similar descent that we saw from roughly July of 01 to March of 08, just sort of a continued deterioration of the dollar. So this 96 handle is going to be a significant pivot point as we move not only through 25, but even through 26. And it is considered an objective below 101.27. A weekly settlement below 101.27 does tip us into that framework where we would expect 96.12. Until then, I'll back us up a little bit. Until then, we can round out of here. I'm going to get rid of this because there's no point to it. The point I want to make here is that until then, holding above 101.27, we can stabilize, consolidate, and round up into this 110 handle again over the next. This was a quick 3-4 month move. 3-4 months from now, can we do a V-shaped rally? I doubt it. I do think there's going to require some consolidation. There's a lot of confusion in the market, but eventually, I'm going to call it 5 to 8 months from now, we can make our way. This is like November, December, back into the low 110s. Once again, low 110s, long-term speed line. This is the granddaddy of the analysis. This is a long-term speed line projected off that 1985 low. This will have a lot to say about whether we continue higher into 26 or whether this is just a price ceiling that the market has trouble with in the coming year or two. So we shall see. We could trade this wedge out. We could fill this wedge out for the next 2 to 3 years. That's right. 2 to 3 years. This is a monthly chart. All right. I think that pretty much does it. I'm going to leave it at that. Thanks for watching. And that's all I have for this particular US dollar index video analysis from wickedstocks.com and our Tag Advisory.